Hey, what's going on, everybody? Welcome back to the channel. In today's video, we're going to be talking about the National Association of Realtors, their lawsuit, the settlement, the aftermath, the changing business practices, if you will, how that's going to actually impact buyers and sellers moving into the future, because these changes are ultimately going to take place here in July. So we're just a couple months out before all of this really starts to roll in and be integrated into the day-to-day business practices for agents and lenders, and how it's going to impact home buyers and home sellers. So I have a couple key points that I want to make. I'm not going to go into too much detail regarding the actual lawsuit. This has been going on for a long time. Many of you are probably already aware of it, but I am going to talk about the changing business practices and what we'll see, at least what we think that we're going to see rolling into the day-to-day business practices, how that's going to impact buyers and sellers. So anyway, if you're new to the channel, I make these videos to keep you up to date on the housing market. We talk about all sorts of stats, facts, and trends. And anyway, if you like that sort of thing, consider liking, subscribing, and we'll jump right into the details here. So this first article here, this is from National Association of Realtors. It talks about the changing business practices. There's two key changes. We're going to unpack both of these. First, says NAR agreed to create a new MLS rule prohibiting offers of compensation on the MLS. This would mean that offers of compensation could not be communicated via MLS, but they could continue to be an option consumers could pursue off MLS through negotiation and consultation with real estate professionals. So let's unpack that here for just a second. Traditionally, if a buyer wanted to purchase a home, they would locate a buyer's agent, and the buyer would talk about the services that they would offer, or excuse me, the buyer's agent would talk about the services they would offer and how they're compensated. Now, in the past, buyer's agents would generally say, well, look, my services are completely covered by the seller via a commission. Generally, it's a percentage. In our local market, it was typically 2.5%. But anywhere, it could be anywhere from maybe 2% on up to 3%. Now, those commissions were always negotiable. However, the buyer's agent never negotiated those commissions. It was always the listing agent would negotiate the buyer broker compensation directly with the seller. So this is a key change, because now the listing agent is no longer negotiating the buyer broker compensation and listing that in MLS for all agents to see. They may discuss that with a seller, and if the seller is willing to offer any compensation to a buyer's agent, but that will no longer be visible on MLS directly. So now, under this new structure, buyers are going to have to locate their buyer's agent, and a buyer's agent is going to have to discuss compensation up front, and they're going to have to really explain the services that they offer, the value that they provide, and how they are going to be compensated. And there's really a few ways they can be compensated. One, they could be paid from the seller directly if the seller is willing to offer compensation to the buyer's agent. Now, that will have to be discussed and negotiated off MLS, like we just mentioned, or the buyer can pay the buyer can pay the buyer's agent directly, or maybe a combination of both. But either way, that is now going to have to be disclosed up front. So we'll unpack that here in a minute when we talk about interested party contributions or seller concessions for closing costs. But we'll kind of circle back to that here in a minute, because there's been some changes there as well. Now, the second rule that NAR agreed to was that they would create a new rule requiring MLS participants, in other words, buyers brokers that are working with buyers, to enter into written agreements with their buyers before they actually tour the home. So in other words, they want them to have a buyer broker agreement on file, stating what their compensation is, and having already reviewed the services that they intend to provide and the value that they're going to bring to the transaction. Now, NAR has long encouraged its members to use written agreements to help these consumers understand exactly what services that they are going to provide. However, the buyer-broker agreements were not always extremely common, because the buyer's agent knew that as soon as they found a property that would actually work, they would be compensated by the seller, and the compensation was listed on the MLS. A lot of times was 2.5%. Let's say, or at least in my local market it was, but that varies. So now, in practice, this is where I think we're going to run into a few challenges or roadblocks. And I think that it's going to unfold in a couple different ways. Now, only time will tell. This is just a little bit of a thought experiment. But let's say you're an agent and you're going to be working with a buyer, and you meet with the buyer and you say, hey, here's all the different services that I render. Here's the value that I bring to the table. I'm going to do my very best to negotiate this deal, and I'm going to do my very best to get the seller to pay this fee, whatever that fee is. Let's call it a percentage of the purchase price. The challenge for that agent is that they still are working for free until they actually close a deal. And they don't know how challenging that transaction will ultimately be, right? They could go out and have to tour 50 homes or 100 homes and write 10 offers. And maybe they get into contract 2 or 3 or 4 times and the deal keeps falling apart. Maybe it's a really challenging client. And it takes forever to close that home, and they don't, you know what I mean? There are different levels of effort and work that take place. And essentially the agents are working for free until they actually close a transaction, unless you're charging maybe an hourly rate, which potentially you could do in this scenario too. So anyway, what I think that you may start seeing is that when a buyer's agent negotiates with a buyer directly, they are going to ask for a larger than normal compensation. In other words, if the norm for the area is, let's say, 2.5%, maybe they ask for 3%. Or if it's 2%, maybe they ask for 2.5%. And the reason for that is because they don't know the level of effort that'll have to take place in order to fulfill that client's needs, number one. And number two, what happens if you have to sign a buyer broker agreement before you start showing homes? What happens if you call up a listing agent and you ask, hey, what kind of compensation is the seller offering? Or are they offering any compensation? And let's say you signed a buyer or broker agreement for 2% because you thought, hey, I'll work with this client. I'll give them a really good deal. I'll do it for 2% instead of 2.5%. So you sign the buyer broker agreement for 2%, and the seller happens to be offering 2.5% in this particular case. Well, at that point, you cannot go back to the buyer and redo the buyer broker agreement for 2.5%. And so I just think there's going to be some stickiness there. I don't really know how that is going to play out. I mean, I'd love to hear some of your thoughts and comments. Maybe I'm looking at this in the wrong way, but leave that in the comments below if you have any thoughts on how that will actually unfold. But you can't really go back and negotiate a higher commission at that point. But I could see you being able to negotiate a lower compensation. So you may start a little higher, and then you take it down based on what maybe the seller is offering, if they're offering anything. You talk to the listing agent, you talk to the buyer, maybe you come up with some kind of hybrid solution where maybe the seller covers a percentage point and the buyer covers a percentage point, or something along those lines to where you get a win-win scenario for everybody. Either way, it's another negotiation point. It's another challenge and roadblock for the buyer. And unfortunately, for first-time home buyers, I do think this is going to present another, hurdle that they ultimately have to jump over, right? Because the average down payment for first-time buyers is coming in somewhere at around, let's say, 5%. So do they really have the additional funds to compensate, their agent at, let's say, 2.5%? Could they pay that out of pocket in addition to their down payment and closing costs? That's probably going to be very challenging in many cases. And, again, this is just me thinking through this. All right, and the last thing that I want to touch on is interested party contributions, which are essentially seller credits. They're utilized to cover recurring and non-recurring closing costs that are associated with the transaction. This includes things like lender fees, title expenses, setting up your taxes and insurance. The idea is the seller provides a credit. It helps offset these closing costs. It minimizes the out-of-pocket expense for a buyer, and then allows them to get into that property. In some cases over the last couple years, especially as mortgage rates have gone up, these seller concessions have been used to buy down the rate, to help reduce the rate, lower the monthly payment for the buyer, helping them essentially get into that home, in some cases even helping them qualify for that home if the debt to income ratios were really tight here. So now, but Fannie, Freddie, and FHA, they all have very specific limits as to how large of a seller concession they can actually provide. So that's anywhere from 2 to, let's say, 9%. Conventional, very common, with 5% down, you can get 3% seller concession to cover those closing costs. FHA, you can get 6% seller concessions to cover the closing costs. Now, the reason I mention these, so they call them IPCs. I mention these because the initial thought was that the buyer broker commission could be covered in a seller concession. And the challenge with that is that, let's say you could, let's say Fannie Mae and Freddie Mac allowed a 3% seller concession on a conventional loan. Well, if you had a 2.5% buyer agent commission, well, that would eat up nearly the entire concession. And now the buyer is sort of at a loss there because they can no longer use a seller concession to offset some of their closing costs and help reduce their out-of-pocket expense to get in the home, because now that concession has to go towards that buyer broker commission. Or whatever amount that they actually negotiate, right? Well, we just got guidance here recently, is that and this is based on their interpretation of the findings here from these government-sponsored entities. So this is a moving target. It could potentially change. But Fannie, Freddie, and FHA, they are going to allow the buyer broker commissions to essentially be credited by the seller outside of the IPC. So the agencies are going to exclude fees. This is the language they use. Traditionally or customarily paid by the seller from the IPCs. They're going to exclude that out of those, which I think is a really good thing. In other words, the buyer can still benefit from a seller concession up to the limits allowed by these government-sponsored entities. So now, does this change access to mortgages for buyers at all? The answer is no. Under the settlement, buyers still have the exact same options when it comes to compensating their real estate representatives. That is, the listing brokers can compensate the buyer broker, the seller can compensate the buyer broker, or the buyer can compensate their broker directly. Now, they do say here that NAR is working to verify this interpretation where will hold. However, none of these agencies will allow the buyer to finance the commission into the mortgage at this time. So that's the one thing that I wanted to point out with these mortgages, is that in order to, let's say, finance a commission, if that was even an option, like, in other words, if you were doing a conventional loan, you were putting 5% down, could you finance 2.5% on top of that to pay for the buyer to pay the buyer's broker directly? The answer to that is no. And in order to do that, they would have to basically rewrite all these mortgage and underwriting guidelines, all these different regulations. It would be a complete mess. However, you can ultimately build it into the price, essentially financing it. If you think about it, that's how this whole system has ultimately worked up until this point. If you're buying a property for $500,000 and it had a 2.5% commission baked in for the buyer broker, then the buyer is essentially financing that commission, right? They're just basing their down payment on the $500,000, as opposed to with this new rule, if the property is listed at, let's say, $500,000 and the seller or listing agent is not offering any compensation to the buyer broker, well, if the buyer was not in a position to pay the buyer's broker directly, well, they may have to offer, let's say, $510,000 with a 2% commission going back to the to the agent that's representing them. That's one of the ways you could ultimately finance that fee. Anyway, hope you found that information useful. There's probably going to be more to come here. We'll touch on this again as things unfold, but I hope you got some value in this. If you did, hit that like button, consider subscribing, leave a comment below. We'll see you on the next video. Thanks so much.